Good afternoon, ladies and gentlemen. Welcome back to Business Today Television. In our ongoing coverage of quality earnings for the fourth quarter, we are now joined by the management of Transport Corporation of India Limited, the country's leading multimodal transport company, where fourth quarter profit surged to 115 crores on a top line of about 1200 crores. There was an improvement across the board in the business for supply chain, in the business of transporting goods both by road and by sea. And to discuss what the future holds, we are now joined by Managing Director Mr Vineet Agarwal. Namaste to you, Vineet ji, and a very warm welcome to you, sir. If you could just explain the 12% rise in profit to about 115 crores. What were the two or three drivers for this expansion?
Hi, Shailendra. Always good to be back. Well, in the last quarter has been interesting because we saw there were a lot of discussions started to happen with the tariffs that was with the US, and hence some companies took a little bit of a step back. But generally speaking, the fourth quarter is usually the best quarter for the year. So we did see the regular movements happening. People were, all companies were pushing things. So that helped us to keep up the some amount of momentum in the business. And overall, some sectors like the automotive sector have been doing reasonably okay. Two-wheelers did quite well. Tractors started picking up also. So generally speaking, that was interesting. Engineering sector also was relatively robust. We did see that steel, cement, and other commodity sectors were a little weaker.
Okay. I'll request the PCI to kindly draw the long-term chart of Transport Corporation of India. This is a very quiet overachiever. In the last 5 years, each year, the stock has appreciated 48-49% and is a multi-bagger over the last 2 decades or so. Mr. Agarwal, let's just break down the business into the three main activities, which is freight division, supply chain, and of course seaways. You had ordered 2 ships from China. What's the status there? This was the update that we had in the previous 2 quarters. Have they come? Has business started via them? And how has the seaways division performed?
Well, seaways has been very good in terms of the last few years, actually, because of the conflicts, unfortunately, because of the conflicts. And some ships that were operating on the domestic leg moved to the international waters. So that created a supply constraint, and hence we are able to increase our rates in the local sector. The fuel prices have been also benign, and our ships have been old. So that has also helped to some extent, and also we have the network of our offices that really push business into the shipping business as well. So we are providing an end-to-end multimodal network to our clients. The 2 ships that we ordered from China are actually going to be due only. They only arrive in July, August of next year. So which means they will really start reflecting in FY27 and not this year. So we are looking to buy more second-hand ships, but we've not been able to find the right quality or the right price recently because of all these conflicts.
Okay. Mr. Agarwal, obviously fuel is one of the major expense items that TCI has. And not only is the country fortunate, but for major fuel buyers such as you, crude oil prices are now at 4-year lows. Although that does not reflect on the domestic number because there hasn't been cut in fuel prices. But for the overseas business, is there a dip in costs that you have seen, or are they just minuscule?
It's very small. I mean, the international businesses for are extremely small for us to have any impact. But mostly speaking, I think we have the containers that are being sent from India overseas. We saw that those rates really did not come down much. You know, we had the Red Sea crisis sector. In fact, freight rates from India actually went up quite substantially. The impact of fuel has not been virtually negligible on the country as a whole. Yes, and also, as you rightly said, the domestic fuel prices have been maintained flat.
Okay, so we leave it at that. because you have the pulse of not only the local but the global economy as well. Mr. Agarwal, what have been your peers telling you as regards this US China trade deal and of course container costs? These are two very good indicators to find out how global trade is functioning. Now that this pact is in place between US and China, is the uncertainty in the market of global transport over?
I would not think so yet. I think there is still some more understanding that has to be built up in the next few months to really what the impact of these tariffs would be. There is some, it's not gone away. So there will be some companies, both who are importing and exporting, will feel the impact. Will India get a benefit out of that? Maybe. So some customers might use this as an opportunity. I know that the EMS sector has definitely used this as a big opportunity. So things have to be seen in the next few months how they will evolve with the tariff structure. And notwithstanding, another thing that I do definitely want to mention here is the conflict that we've recently had, India Pakistan, where some amount of supply chains have also been disrupted and business momentum has not slowed down but has been impacted. If there were people who were coming from overseas, some of them did cancel their trips. Some
Yes.
conferences have been cancelled. Warehouses and factories were shut in many places in Punjab, Haryana, Rajasthan, as well as the labor has moved out from these places also.
Yes.
So some of that impact for the domestic economy will be felt in the next few months as well.
So you would presume that for companies such as TCI, April, May, June quarter will be, how should I say, soft?
Not really, because see, one is that April, May, June is generally softer because you're coming
Correct.
from high quarter. However, what happens is that are a very national company. So some amount of volumes that are there does get shifted to other places or we get additional business. It would be moderate, but I think some companies might get impacted a little bit more than others.
Okay. In your case, was some of the sectoral supply chains disrupted for a week or so?
Yes, like for example, we ran a warehouse for an FMCG company, and they had to shut down operations in Punjab because of blackouts, etc. And so the BCP, that is a business continuity processes, kicked in, and we shifted those operations to another warehouse. Like this, things were disrupted for definitely a few days.
Okay. In terms of expansion, we've seen now 3 months gone by. For the remaining 9, how do you see fresh additions to your capacity in freight and sea transport in particular? You did say that you wanted to buy some second-hand ships.
That's right. So our capex for the financial year FY26 is about 450 crores,
Okay.
and out of that, about 125 crores is going into warehouses and hub centers, about 100 odd crores into trucks, and about 100 crores into ships. These are ships as in prepayment that we are doing for the ships that are coming in 26. We also are, of course, investing into warehousing infrastructure, IT systems, etc. So all this is sort of the 450 crores. If we do end up buying a second-hand ship, this will be in addition to that. So we are still yet to identify, and if and when that happens, then we can look at that. But right now, the capex is about 450 crores.
Just an odd question. How much does a second-hand ship cost?
This is a phenomenon that has perplexed a lot of people. Where pre-pandemic, actually, the ship that we bought, um, and a sister ship is available 5 years hence at more than 2x the price. So it's the prices have just gone quite haywire. It depends on the size of the ship, how old it is, which sector, where it is built, and so on. So no specific number, but the range that we are looking to spend is between 100 and 150 crores.
Okay. I believe there's a waiting list for new ships. So if you order something today, when would the delivery be?
2 years at least. Again, depends on the size.
Okay. Let's just shift our discussion to the other parts of the business. Mr. Agarwal, when you see the broader EMS sector, How do you see their expansion as of now compared with what it was 1 year ago? The reason why I ask is that this is one of the fastest growing sub-segments in our country, and nothing escapes you, whether people who are buying raw materials, importing them from overseas, or shipping finished products, they have to go via you. If you can just give us the pulse of this EMS space.
EMS is interesting because it has the scalability is extremely high here, and the the issue has always been: are we producing these parts in India or are we still importing them? And we're just doing an assembly, which is essentially sometimes felt as job work. However, I think the value addition element has started to come in now much more rapidly with the PLI scheme, and components are also getting produced in India, and those will be specifically used for production for export as well as the domestic market, which is also growing quite rapidly. So the sector is promising. There is going to be a lot of growth, and I guess as a company, we will benefit from the domestic movement as well as some amount of international movement, but also some amount of warehousing and other fulfillment services that we need to provide to these companies, both on the inbound side and the outbound side. So definitely interesting times with the EMS. But Shailendra, in that vein, there are lots of other industries that have started to come up because of PLI, the EV battery industry or the solar panel industry or even semiconductors, etc. So these are all similar type of businesses on the higher tech side, which will have greater opportunities in the future.
Mr. Agarwal, just a ballpark assessment. Has the EMS space as a percentage of total contribution increased in percent for TCI?
Not really, no. It's a small percentage of our business, and but as you know, that a lot of this is being exported right now.
Yes.
So we are not in the export value chain as we speak, but we are definitely in the domestic value chain.
Okay. In terms of fresh requirement of funds, this expansion of 450 crores, will it be done internally?
Yes, I mean, we are net positive in terms of cash right now. We have about 250 odd crores of cash on our books. Some of the truck financing will happen. Some debt will take. We have about 100 crores of debt right now. And the business throws out about 500 crores of free cash flow yearly. So all of that should mean that we should be able to do this internally with some borrowing.
Okay. Given the soft first quarter, would you want to speculate on the guidance for growth in FY26 sales?
The quarter is not over yet. It's still midway through the quarter. So uh, let's see what happens in the quarter. But generally speaking, the guidance for the year is 10 to 12% on the
Yes.
top line and the similar for the bottom line. I think it should be achievable.
Okay. With that, Mr. Agarwal, we'll thank you. What a pleasure speaking to you. And as always, let's wait for the forthcoming quarters to see how the economy perks up. Thank you so much for your time.
Thank you so much. Thank you, Fab.
That, ladies and gentlemen, was Mr. Vineet Agarwal, the Managing Director at Transport Corporation of India, the top multimodal agency which moves all sorts of raw materials and finished goods from across the country. Truly speaking, this is one company whose earnings reflect the pulse of corporate India. There has been an 11% rise in profit after tax for the fourth quarter at about 115 crores, and revenue has also risen in about 10% to 1200 crores. Thank you so much for watching. I'll be back at 3 p.m. for the final round of the market. Have a nice day.
A desperate Pakistan is pleading with India to reconsider suspension of Indus Waters Treaty. Sources tell India Today that Pakistan's Ministry of Water Resources has written to Ministry of External Affairs warning that India's move to regulate water flow to Pakistan could lead to a